you're talking about billions and billions of smartphones, billions of tablet computers, billions of PCs, billions of other types of computer hardware that all have a useful life cycle of 3, 4, 5, 6 years, no different. And they're in essence orders of magnitude more than the number of Bitcoin miners. The first question I got from someone is they read about Intel rumors that Intel may enter the Bitcoin mining industry. And I saw those rumors today. What's the impact on Bitcoin mining? And I think it's still too early to know, but I think it's a great sign that a major company in the United States is interested in investing in Bitcoin mining equipment. And I think it's going to drive a few things. First of all, it's really going to accelerate the energy efficiency improvement of Bitcoin mining, because they're talking about creating extremely low power ASIC chips. And so the only way they can enter the business is if they come up with a better semiconductor. So if they're able to create a low power semiconductor or ASIC, then it will just accelerate the technology efficiency further and faster for the entire network. I think the other thing that's auspicious would be it's an indicator that proof of work drives free market competition and innovation in security and in the overall network. As new companies like Intel, and I think Block announced they're working on a Bitcoin miner as well. When you have these big tech companies investing engineering capabilities into the semiconductors or into the machinery, they're entering under a competition, and the competition means that they're going to continually drive forward the hardware on the network, and they make it difficult for anybody to rest on their laurels because they'll be obsoleted. And so I just see it as indicative of the vitality of the network and a good thing overall. So the irony is you hear these comments, but it almost feels again like kind of FUD from proof of stake networks or entrepreneurs that are hoping for some other approach. Because if you were to consider not just e-waste, but if you were to consider industrial waste, what about the number of cars, washing machines, and airplanes and trains and industrial equipment that is discarded after a useful lifespan or rusted or ships? There's the amount of waste in the world would be such that we're probably going to find the ratio is the same. It's like 5 basis points carbon footprint. If you could find 5 basis points of waste footprint, I would be shocked. I wouldn't be surprised if it isn't 1 basis point or something. So it seems like a red herring, but we do hear it. But the bigger point is, even though they're off by a factor of 4 or 5 on the estimate of the useful life, they're off by a factor of 10,000 in terms of order of magnitude relevance to anything, really. The innovation of Satoshi was the creation of an open, permissionless network to create digital property. The idea that you could create digital property with integrity and security in a permissionless context, and it was done via proof of work hashing. When we start with that observation, it's pretty clear that it's an obscenely efficient network, by any measure, getting obscenely more efficient. So if you compare it to any other industry, there really is no way to use energy more efficiently. So oftentimes the criticisms tend to boil down to ideas that are posited by entrepreneurs that support proof of stake approaches, some other kind of way to create a network. And they posit that, well, if we could just do it without energy at all, then it would be better. And the problem is, why do you have to use energy at all? And I think it's just really important for us to deal with the primary differentiator here, which is the only way that mankind has found to create digital property in an open, permissionless fashion is with proof of work. And Bitcoin is the proof of that. Proof of stake has not successfully produced a digital property network. No one has succeeded at creating a permissionless, open, fair property with proof of stake. In fact, they've all been deemed as securities. So this is really a debate between whether you believe in digital property or whether you wish to solve your problems with a digital security. A digital security is not an innovation. In essence, gaming tokens on Second Life or Fortnite or coupons that circulate on the Apple or the Google network, they're all examples of securities. Frequent flyer points, they're all securities. Stocks are securities. Staking networks have been designated explicitly as securities by lots and lots of very well-regarded regulators. And I think that if you have a decent appreciation of securities law and the nature of these networks, what you realize is they're all securities. The stable coins are securities, the crypto tokens are securities. Anything with a proof of stake is a security. It's not a property. And so you can posit that a proof of stake network would be more energy efficient, but you haven't created open, permissionless, secure digital property. What you have created is a coupon circulating on a database.